Buying your first car in South Africa is one of the biggest financial decisions you'll make as a young adult. It's exciting, empowering, and deeply personal, but if you're not informed, it can also be financially devastating. In a country where public transport is unreliable and safety is a real concern, owning a car gives you freedom, opportunity, and dignity. But before you walk into a dealership or sign a finance contract, you need to understand the full picture, beyond just the monthly installment. This guide is designed to give you real, practical insight into buying your first car in South Africa. No fluff, no marketing spin, just the truth. Let's start with the hard question. Do you really need to buy a car, or do you just want one? In South Africa, many people feel pressured to own a car as a status symbol. But a car is not an investment, it's a depreciating asset. That means the moment you drive it off the lot, it starts losing value. Ask yourself, do I have access to safe, affordable transport alternatives? Can I realistically afford the costs beyond the car price? Is this purchase a need or a lifestyle upgrade? If you need a car for work, family responsibilities, or personal safety, that's valid. But don't let peer pressure, family expectations, or ego drive you into debt. Cash versus finance. Understand your options. In an ideal world, everyone would buy a car with cash, no debt, no interest, no long-term payments. But most South Africans don't have that kind of money up front, especially for their first car. That's where financing comes in. Option 1. Paying cash. Pros. No monthly debt obligations, no interest or finance charges, you own the car outright. Cons. You might deplete your savings, you may settle for an older, less reliable car. Option 2. Vehicle finance. This means taking out a loan from a bank or finance house, typically repaid over 60 or 72 months. Pros. Access to newer cars, spread cost over time. Cons. You pay interest, a lot of it. Long-term financial commitment can end up underwater, owing more than the car is worth. You'll also encounter balloon payments, large lump sums owed at the end of the contract. These can trap you in a cycle of refinancing and debt. Avoid balloon payments unless you're certain you'll have the cash at the end. Total cost of ownership, not just the price tag. Many first-time buyers make the mistake of only budgeting for the installment. But owning a car comes with multiple monthly and annual costs. Let's break it down. 1. Monthly repayment. This is your car loan installment, usually the biggest monthly cost. 2. Insurance. In South Africa, comprehensive insurance is a must. It protects you if your car is stolen, hijacked, or damaged. Factors affecting your premium: age and gender, type of car, where you park at night, driving history. 3. Fuel. With petrol prices fluctuating constantly, budget at least R1,500 to R2,000 per month for an average commuter. 4. Maintenance and repairs. Even if your car is under warranty or has a service plan, there will be costs. Tires, R4,000 plus every 2 to 3 years. Brake pads, oil, filters, out of warranty repairs. 5. License renewal. Annual cost, around R600 to R1,000 depending on your car's weight. 6. East tolls and road use. Depending on where you live, factor in tolls and road fees. Always ask yourself, can I afford the car plus all the extras? If the installment is R3,000, budget at least R6,000 total for monthly running costs. New versus used. Which is right for you? New cars. Pros. Latest technology, full warranty and service plan, peace of mind. Cons. High price, rapid depreciation. Lose 20 to 30% value in year 1. Used cars. Pros. Lower upfront cost, slower depreciation, can get more car for your money. Cons. Unknown history, may need repairs sooner, could lack warranty or service plan. Tips for buying used. Always get a full service history, insist on a DECRA or AA inspection. Avoid buying from private sellers unless you're mechanically savvy. How vehicle finance works in SA. In South Africa, vehicle finance is regulated by the National Credit Act. Here's what you need to know. Minimum deposit. Often zero, but 10% plus is ideal. Loan terms: 12 to 72 months, 60 months standard. Interest rate linked to prime, currently around 11.75%. Your rate depends on your credit score, income, and risk profile. Balloon payment. A lump sum payable at the end. Lowers your monthly installment but leaves you with a large amount due later. Total repayment example. Car price. R150,000 deposit. R0 term. 60 months interest. 13% monthly repayment. Plus or minus R3,500 total paid. Plus or minus R210,000, that's R60,000 in interest. Be wise. Building your credit score for vehicle finance. Your credit score determines if you get approved for finance, and what rate you'll pay. In South Africa, a score above 650 is considered good. Tips to build or improve your credit. Open a small account, e.g., clothing or cell phone. Always pay on time. Never use more than 50% of your available credit. Check your credit report every year. TransUnion or Experian. A good credit score can save you tens of thousands in interest over the life of a car loan. Dealership versus private sale. Dealership pros. Finance arranged on-site, cars checked and cleaned, option to trade in, more legal protection. Dealership cons. Higher prices, sales pressure, hidden extras, admin fees, delivery, etc. Private sale pros. Better prices, direct negotiation. Private sale cons. No finance option, no protection if car has faults, must handle paperwork yourself. Buying privately. Insist on full service history, original registration documents. Roadworthy certificate, police clearance, if necessary. When buying a car, look out for extended warranties, often unnecessary and expensive admin and delivery fees. Negotiate or walk away. No deposit required. Ads usually lead to higher interest or balloon payments. Pre-owned cars with no service plan. Budget for annual services. Mileage tampering. Common in used cars. Check VIN and service history. Remember, if it seems too good to be true, it probably is. First-time buyer tips. Set a realistic budget. Use the 20th of April 10 rule. 20% deposit, 4-year loan, maximum monthly installment under 10% of income. Shop around. Compare at least 3 quotes. Get pre-approved. This strengthens your negotiation power. Understand the fine print. Ask questions about interest, insurance, penalties, and balloon payments. Don't buy with emotion. Stick to facts, figures, and needs, not vibes. Walk away if pressured. No deal is worth long-term regret. Practical checklist before you buy, before you sign anything. Do you know your credit score? Do you have a stable income for 6+ months? Have you compared insurance quotes? Have you calculated total monthly costs, not just installment? Do you have a service history and roadworthy certificate? Have you test-driven the car on different road types? Are you emotionally ready to handle debt responsibly? What to do after you buy. The real journey starts after you buy your car. Set up automatic debit orders for your repayment and insurance. Keep servicing the car on schedule to maintain value. Avoid aftermarket modifications. They can void your insurance. Build an emergency fund for tires, brakes, and surprises. Drive carefully. Traffic fines and accidents are expensive. Most importantly, treat your car like a tool, not a trophy. In a tough economy, scammers are getting smarter, and first-time car buyers are prime targets. Here are the most common car-related scams in South Africa and how to protect yourself. Fake dealerships online. These dealerships post professional-looking listings online, complete with pictures, specs, and discounted prices. Once you show interest, they ask for an admin fee or holding deposit to secure the vehicle, and then vanish. Tip: never pay money without verifying the dealership's physical location and company registration. Always view the car in person. Clocked mileage. Unscrupulous sellers wind back odometers to make older cars seem barely used. Tip: ask for service records and check wear on pedals, steering wheel, and gear knob. These often reveal true age. Accident rebuilds. Some used cars are written off by insurers after a serious accident, then repaired and resold without disclosure. Tip: run a VIN check through TransUnion or Lightstone to see the car's accident history. Stolen vehicles. You might unknowingly buy a stolen car, especially from informal sellers. Tip: always check with SAPS or Roadworthy Center that the vehicle is not flagged as stolen. What if you can't keep up with payments? Life happens, retrenchments, emergencies, or economic downturns. What if you can no longer afford your car? 1. Communicate with your bank early. Don't wait until you're in arrears. Most banks will help restructure your payment plan. 2. Explore voluntary repossession. You return the car to the bank, they auction it, and you pay the shortfall. It's not ideal, but it's better than ignoring the problem. 3. Sell the car yourself. If you owe less than the car's market value, you may be able to sell privately, settle the loan, and downgrade. Remember, defaulting on your car loan damages your credit record for years and limits future financial opportunities. What this purchase really represents: buying your first car in South Africa is more than just a financial decision, it's a life milestone. It symbolizes independence, responsibility, mobility, and opportunity, but without the right financial planning, it can also become a trap, chaining you to debt, unexpected costs, and stress. So here's what you should take away. Always consider the total cost, not just the monthly payment. Shop smart, not emotionally. Protect your credit, peace of mind, and long-term financial health. Let your first car be a tool to move you forward, not something that drives your finances off a cliff. Buying your first car in South Africa is a rite of passage, but it shouldn't leave you broke or stressed. Take your time. Ask the right questions. Understand the full cost. And remember, the car you drive at 25 doesn't define you, but your financial decisions will shape your future. Let your car be a stepping stone, not a stumbling block. Drive safe. Spend smart. Stay free. Your journey starts here. Not just with a car, but with financial clarity, purpose, and control. This is Rand Sense. Helping everyday South Africans make sense of their money, one smart choice at a time.